everybody, my name is Adam Meyer. I am back with another video, and today I'm going to go over why and how to invest and how easy it actually is to actually understand these concepts. So I'm going to get into it here. So I briefly mentioned it in the last video, but we want as investors to increase our quantity. Obviously not financial advice, but I want to increase my quantity, and that's what big successful investors do. They bet on America, they bet on stocks, they bet on companies, because the companies own society, they own the employees. That means they own the workers of society. And I don't know about you, but most people do work. Some company owns your working that you're generating them profit, so it then eventually flows into the market. So if these companies go away, then the economy goes away. So why not make money in it? That's how I personally look at it. So we want to increase our quantity. So increasing our quantity, what does that mean? So like, let's say you have one share of Google. How do you get to 10? How do you get to 20? And then from there, how do you get to 200? You know what I mean? So same thing with Amazon. How do you go from 1 to 10 to 20 plus? How do you keep doing that? So during times, you can buy stocks at a discount. That's why I'm really liking that we are falling, even though things can get worse. But that's okay. I don't want to miss if this thing does move up. I'm not having FOMO. I'm actually buying at a discount. From people that were buying up here, they are now paying 50% less. So if they could buy one up here, now they could buy two down here. So someone that spent 180 bucks on one share of Amazon up here, they can now buy one at $90 right now. So that's about the area. So if they waited, they could have bought two now, but they didn't know that could happen. I mean, that's like the whole point of long-term investing. But now that we actually see the market coming down, really good investors actually understand that this is actually an opportunity to buy the dip. So we are seeing prices of all these stocks come down in these lower ranges back from way back in like 2019, 2018. We could even reach down here back to like 2017. That's when I graduated high school. So like that's actually a long time of gain that's just completely wiped out. So I don't want to miss out on these opportunities because Amazon's still here. Yes, they just announced they're laying off people, but I still want to buy in these lower ranges to get better deals for the long term. So I can buy shares here, shares here, shares here, shares here, shares here. So I'm buying along the way down and even on the way up, but when it comes down, I'm buying more. So that's the whole point. Same here with Meta. Meta's getting completely slapped. This is worse than I thought. But I did start buying this in, I believe, 2017. So now I'm actually negative on my average cost, because obviously I was buying on the way up. And things did come down, and then they're lower than expected. I still believe in Meta in the long term. I just think it's going to be a long time before things come back. But looking at the chart, everything's coming down, down. Google, Nvidia, everything coming down. And it's like these are really good companies just coming at a discount because of future projections of things getting bad and worse. So there's a bunch of fear in the market. I want to keep buying when there's fear in the market, even though my trading, I can predict it to still come lower too. So I should probably go over this real quick, but for investments for long term, I do like VOO and QQQ. The VOO is the Vanguard S&P 500 ETF, which is the exchange traded fund. So there's 500 stocks sitting within this one ETF. So you'd buy VOO, and that would contribute of the 500 stocks, and over time is basically a bet on America and bet on the companies that are within America, because when the economy does well, this ETF will do well. So this is what I'm currently buying every single week. Same with QQQ, but QQQ is 100 stocks within this, but this is the tech industry. So it's a lot of Apple, Meta, Google, Amazon, Tesla. So that's a lot of what's within QQQ. You can look into that yourself if you really want. But these are the two that I'm really betting on for the long term to actually bring me to that 9% average annual rate of increase of my portfolio, and even higher is what I'm expecting, especially for QQQ when tech really does get big, when it gets big with crypto in the AI sector and everything like that. So I'm gonna pull up this compound interest calculator. So if you have $1,000 in, let's say you have $1,000 in the market, and every single month you're putting in 400 bucks. Like that's 100 bucks a week. Let's say you take $100 from your paycheck. Even if you wanted to take less, you could do that. But over time, let's say on average it's 100 bucks a week. You can even raise it to 600, because as you get older, you might get a better job, you might get a college degree, you might start making more money. So let's say 600 bucks per month that you're putting into the market. So like, let's say you want to retire in 30 years. Let's just say 30 years. I'm not going to go any higher than that. Let's just say 30 years, and then estimated interest is about 9%. Let's say 9% per year. That's on average like what you pick. If you want to even be safer, you can go down to 8%. If you calculate, you're down here at $825,000. If you put $600 a month in on your original investment of $1,000 for 30 years at 8%, let's go to 9%. If it goes up 9%, where we get a really big economic boom of a bunch of robots and everything that like really take over, and you own the stocks like Tesla and Nvidia and AMD and a lot of these tech companies, let's say on average it's going up, let's say 10.5%. We're going to be up here probably over $1 million. Let's give it a guess. Yep, $1.3 million. Like that's the big thing about compounding interest when it comes down to investing. And that's personally why I like investing in these companies at a better deal, because when they do finally decide to go back up, which they will when inflation gets better and the money printer starts going, we're going to be going back up into there. So I'm going to wrap this up here. I hope this helps you understand what investing is like and how the rich and the wealthy actually look at it in the long-term sense. So buying lower, increasing the quantity, and not really looking at the money amount that you have in it. You do, not financial advice, but you do got to keep in mind your actual life so you can afford things, afford your bills, your house, your rent, your car, your food. Obviously, you have to take care of that stuff, but whatever else, why not start thinking about investing into companies that will generate income over time? So you start owning the companies instead of the companies actually owning you. So let me know if you have any questions. Take care, everybody.